The following takes place between 11 a.m. and 12 p.m.
I'm your huckleberry.
Won't you take me back to school? I need to learn the golden rule. Won't you lay it on the line? I need to hear it just one more time.
Welcome back to the second hour of today's episode of Butler on Business. My name is Jason Riddle in the studio with Alan Butler. Alan, what are the markets looking like as we come back into this hour?
Dow's up 128. The S&P is up 15. Ironically, the market's up, as is the dollar, ever so slightly. But we're here to talk about the precious metals right now. And for that, we've got David Morgan. Why don't you tell him about the Morgan Report, Jason?
David is one of the leading experts here in the United States on precious metals investing. He is the publisher of the Morgan Report, and we're happy once again to have David Morgan on the phone with us today.
David, we've had quite the run in silver and gold lately.
Well, it's been quite a start to the new year. Gold's up about 13%. Silver almost double that, well over the 20% level. And I think we're just getting started. I think we're going to, cool off here for a while, but I'm looking for stronger prices by the end of the year in a kind of a very broad trading range. But it just looks like more and more people are waking up to the precious metals.
Well, gold spot hit the highest prices we've seen since mid-November before falling off and later trading this morning. It's down about $20 an ounce. But, of course, this week the Fed announced its decisions to keep interest rates low now into 2014, and I assume that that's pretty bullish for the metals.
Absolutely. In fact, when we had the open on the day of the Fed announcement, the metals were actually trading lower and off a fair amount. And once Bernanke opened his mouth and talked about keeping interest rates at zero through 2014, so another 3 years, 2012, 2013, and all through 2014, that took the market in a big U-turn, pushed the metals up significantly higher on that day. And I jokingly say I wish Mr. Bernanke would be more transparent and give a Fed briefing once a week. It's usually good for $40 in the gold market.
Yeah, and actually, if you count where we were when he opened his mouth, while gold closed up $40 that day, it was a $50 reversal.
Exactly. So I said 50, in fact, not to you, but in another program I did. So, if we got it on once a week, that'd be worth a couple $100 a month, and I think everybody would be very happy after several months.
David, a lot of people who aren't into the precious metals don't really realize how that is an excellent savings account right now.
Well, what it comes down to is the traditional argument is, inflation or deflation. I don't get it. Which way is it going to go? But really what you want in an inflationary depression or a deflationary depression is you want savings. And then you have to ask one critical question that very few people ask and very few people are aware of, and that is, how do I save? And what you save in is money. And now you have to define money, which is the subtitle of the Morgan Report, Money, Metals, and Mining. And that's why I pound it so hard, because traditional classical money, gold and silver, are the only money you should really be saving in. Not to say that you don't have to have fiat. You do to exist, in the world as it is. Nonetheless, your excess, your savings, should actually be in real money. If it's not, it could be hyperinflated away. It could be inflated away. There's lots of things that can happen to it. In fact, I just put out a new blurb to our paid members on the Argentine currency crisis, because the question I get very often is, well, how is it going to unfold, David? What do you think is going to happen? And, in total honesty, no one knows exactly. But I like to use history as the best basis to forecast what could possibly take place in the future. And watching that video, it's on PBS, the public broadcasting system, you see that the banks did not close, but you were restricted, no matter how rich or poor you were, to getting about 200 pesos a week, or roughly 1,000 per month. And this caused massive hardship throughout the country. But yet their banks were open. Now, you could have a huge savings account. You were unable to retrieve those funds. So that was just part of this documentary, and I think that is a possibility. I don't want to scare anybody. I hate playing the fear card, but I also want to be a realist. And we are in uncharted waters. We are in uncertain times. And this banking crisis continues to be pervasive throughout the entire global system. So if you don't understand that, then you can ignore the gold and silver story. If you understand even part of that, you should investigate it further and certainly consider how strong gold and silver do in those type of climates.
You know, one thing a lot of the paper money fans are pointing out is the stock market is up, 3% on the year. But if you value the stock market in gold or silver, it's down quite a bit, almost as much as the purchasing power of the U.S. dollar since we rolled over into the new year. The market's not going up. The market is going down along with the dollar when compared to gold and silver.
That's absolutely true, and it's a great way to look at it. Look at it in terms of real money that we talked about just a moment ago. You can also look at it on an inflation-adjusted basis, and you have two ways to do that. You could take the Federal Reserve's number and the CPI that's been so misadjusted that it's a farce. I mean, you take out food and energy, the two things humans need the most to exist. Take that out of the consumer price index. Give me a break. But even saying that, if you adjusted it just for the CPI, you'd get a different picture. And if you put it on the real basis of the way inflation was measured back in the, say, the early 80s, you would see a far different picture as well. But on any basis, if you look for the truth, what it's actually doing in parameters that are factual and not these made-up bogus numbers, you'll find that certainly the stock market's gone nowhere. In fact, it's certainly gone down in real terms. And that's something a lot of people don't understand is the word nominal. So gold's at a nominal new high. It's has been the nominal new high for gold is $1,900 the ounce approximately. We're at $1,750 right now while we're doing your show. However, that number is a bigger number than the $850 of January 21st, 1980. But in real terms, it's not. So gold has not hit a real new high in purchasing power. It would have to get to about $2,500 an ounce using the CPI that the Fed has put out or the government has put out. And you'd have to really be, in my view, well beyond that to make up for all the misallocations of capital that have taken place in the last 30 years.
Well, that's one of the stats that we follow. If you go back to the Reagan-era methodology for tallying inflation, when it was intended to tally the cost to maintain a certain standard of living, for gold to match that $850 number that we had in 1980, it would need to be above $5,000 an ounce. Silver, in order to match that intraday high of $50 back then, using the Reagan-era methodology for calculating inflation, silver would be over $500 an ounce today. I mean, those are staggering numbers. Using the Clinton-era methodology, we got more than a triple coming. I think we have to be up around almost $150 an ounce in silver, just getting back to the way they tallied inflation under Bill Clinton.
Exactly. And again, the thing to stress, I think, is not the fact of the numbers are important to get the concept, but an ounce of silver is an ounce of silver. In other words, that ounce doesn't change. What changes is the paper price, and why is that? And the answer is very simple, because in the time we've done this show, they've already printed millions of dollars that don't exist. I should say they've borrowed billions of dollars into the system to continue this basically Ponzi scheme. I mean, basically it's impossible to pay off the current debt, let alone the ongoing obligations that are way out in the future that have been promised to, military retirements, government workers, pension plans, healthcare systems, and on it goes. So someone can stand up and tell the truth, but you're not going to get it from the political parties. And that's unfortunate. Of course, there is one, actually, that does tell that, and that's Ron Paul, but he's marginalized so much, you never really get to hear much from him, even though I think he's resonating with a great deal of people in America these days.
Actually, I heard that Mitch Daniels attended a gathering with Ron Paul, and he was shocked, saying, where have all these people come? Where have they all come from? And we're all free market, real money people. And that's the reason we support Dr. Paul.
Well, he's a wonderful human being. I had the honor of having dinner with him at a Austrian club party or dinner one time. But what you see is what you get with him. He's always the same and very consistent. And as long as he's been in Washington, D.C., he really hasn't been corrupted. I'm not sure I have that kind of integrity. I'd like to think that I do. But everything in Washington is about compromise, and he will not compromise his principles, and I really, really admire him about that. The other factor is what you said. You look at why are so many people in favor of what he says when all we get from the mainstream media is this dialectic about, the Republicans want this and the Democrats want that, trying to divide everyone. I think there's a lot of Americans that are coming together based on the principles that made this country so great, which is what Ron Paul espouses. And you get huge applauses. So I really think it's a cooked book kind of thing that the media is stressing this side or that side, when in reality there's probably a lot more people that support the ongoing principles, again, that made this country so great, under the wire, so to speak, that's really not being mentioned by the mainstream, but it's there, it exists, it's growing stronger, and it's probably a much bigger amount than most people recognize.
Despite this rally that we've had in the equities, the Dow Gold ratio started the year at 7.8. We currently sit at 7.3. The stock market has not gone up. The dollar has gone down.
Exactly. So coming back to where we started the show, save. You must have savings, but how do you save? You save in something that is going to maintain its value, and that's what you need to stress. And it's a very simple thing. It's showing up throughout history. These type of currency situations have always proven to fail, and fail doesn't mean absolute zero. That's another question I get quite often. Well, what happens when the dollar's with zero? I don't think it will ever be worth zero. I mean, if you use the Federal Reserve Board's own basis, again, I question their numbers, but if we use them to be consistent and also can be verified in the public domain, the 1913 dollar, it was a mandate to maintain a monetary policy which would maintain a stable dollar. Well, their stable dollar from 1913 when they were founded till now is worth about 3.5 cents. Now, I defy anyone to look me in the eye and tell me that if you had a 100-point quiz and you got 3 points on it, that you were anything but a miserable failure. And that's where we are. Where do we have to go to for the rest of the world to recognize that this thing has failed? Do we have to go to 2 cents, 1.5 cents, 1 cent, 0.1 cent? Where does this go? And I think that's the question. A lot of people in the gold and silver community certainly understand exactly what I just said, that this thing has failed for all practical purposes. And again, they have to maintain some sort of fiat maintenance to pay their regular bills to, the community at large, but their savings should be in something that is proven to overcome these type of problems that have existed not only now, which is worldwide and far beyond anything that's ever existed in monetary history before, or in other times in history where it certainly has existed and people suffer just as much.
Well, I don't question the Fed's numbers. I know they're lying. And speaking of Austrians, we got to go because we've got a fellow Austrian coming on in the next segment, Dr. Walter Block. David Morgan, the Morgan Report. It's always a pleasure talking to you, guy.
Thanks so much. Bye for now.
Bye. This is Alan Butler. Jason and I will be back with Dr. Walter Block on the other side of the break.